So the stock market has been extremely hot for the past couple of weeks. And if you guys remember back in the end of Q3, when we saw that significant pullback, about 4 to 5% pullback on the S&P 500, we made a video saying, will there be a crash by the end of the year? If you go back and watch that video, basically recapping it, I was saying that we were either going to break $430 on the S&P 500 and see a continued sell-off down to about $400, which would be a 10% correction, or we were going to finally get out of this bounce that we had here where we were going to actually start to make a higher high. And then going into Q4, which is usually our strongest quarter, we're going to see a continued rally to all-time highs and then potentially a significant correction in the beginning of Q1, so like January, February. What I want to do in this video is give you guys an update on that, because that is exactly what has been happening. So we're going to go over the market and really where I see the overall market going within the next couple of months, really looking at the next 3 to 6 months for everyone who is a long-term investor, whether you're holding the S&P 500, which I don't recommend trying to day trade, right? If you're just somebody who's holding an index fund, don't do that. Or if you're just interested in where I see the market going for the next couple of months. So guys, hit the like button, subscribe. If you haven't already, go and check out our Discord. It is completely free. It is based more around trading because we do have another channel called Traders Helping Traders, but I do put all my long-term positions over there as well. Great community to be a part of, so go and check it out. Now, looking at the S&P 500, if we just go and check out a weekly chart, when it comes to charting, this is really the best charting to look at. There are a lot of people who believe that fundamental investing, there is no reason to watch charts. I am not one of those people. With my long-term investments, I always watch charts, not every single day, but I will come in every couple of months and just take a look at a weekly chart. The bigger the time frame, the more significant the chart holds. So I'm not looking at like 1 hour charts. I'm looking at how the stock has been performing and what the trend has been for years. That's the most important thing. Now, if we look at the S&P 500, for those of you who don't understand charting or don't really care, there are a couple of important things here to notice. You can see this is the drop that we had during the COVID pandemic. I don't even want to say the full word, but whatever. And then ever since then, you notice that we have just been making a solid and consistent move up. Every single time we pull back to this blue line, which is the 22-day EMA, we have bounced every single time. It looks like we're going to sell off and then we completely recover. This is why I never go against the market. Now, we are talking about long-term investing here, but even as a trader, I never go against the market unless we are in like a full-on bear market for 2 or 3 years like we had in 2008, 2009. Besides that, I don't go against the market. Now, through September, which tends to be one of the worst, if not the worst months for the stock market, we saw a move from $454 down to $425, which was a 5% correction, which I consider that to be a correction. Correction is normally a 5% to 10% pullback. And if we pull up a seasonality chart here, which we're going to talk about later, you can see this is September. September is the worst month for the stock market. So each one of these bars represents how many times or really what the percentage is that the stock market's going to go higher within that month over the past 8 years. So basically since the financial crisis in 2008, this is how the S&P 500 has performed. And you can see here that 38% of the time in September, we make a higher high than we did in August, which is the worst of any month. The worst months are January and September. You can see here that on average, the S&P 500 loses 1.7% in the month of September. So obviously month of September was really bad. We had a bad month. Then in October is a 63% chance. So we had that sell-off in August and September. September, we closed the final week of September down at $430. So we did have a negative September. Then since then, the first week of October, we took a bounce. Second took a bounce. Third took a bounce. Fourth took a bounce. And now we are up at all-time highs. And a lot of people are like, I don't know if the market is going to continue to push into the fourth quarter and how this is going to go. So what we're going to look at now is how the market normally performs and use data to tell you what the probability of something is of happening. Of course, when we look at seasonality data, when we look at overall trends, when we look at, even if a company is undervalued, we're not predicting the future. We are trying to use the probability that something will be worth more later on, or that our thesis is going to be correct later on. You guys know that just because a company is undervalued doesn't mean that it's going to go up in the future. We're playing probabilities here. Now, looking at the S&P 500, there are indicators here that are looking very good. For those of you who don't know, we have an RSI that is pointing up. It is starting to get overbought, but still, RSI pointing up. That is very good. MACD is about to cross. That is very, very good. TTM is squeezing. That is about to release. That is very good. Then OBV is pointing straight up. That means buying volume is coming in, which is what we need to push the S&P 500 up. Now, looking at this here, you can see that the best month for the S&P 500, the two best months is April and November, which is what just started. In the past 8 years, every single November, the S&P 500 has closed higher than it did in October. And not only higher, significantly higher. So you can see that every year for the past 8 years, the S&P 500 has closed up. And you can see that on average, within those past 8 years, the S&P 500 makes a 3% move to the upside. That is massive. Now, it doesn't mean that it has to happen. It just means that over the past 8 years, every single November has been massively bullish. We know as well that Q4 is one of the best quarters as well, the Santa rally as well. So that means that November, I feel very, very bullish. I have a lot of money in the market. Doesn't mean that, the market has to go up. I have a lot of money in my long terms right now, and I have a lot of money when it comes to trading. Now, the next thing is looking at December, because we're looking to full Q4. December is basically the same as October. 63% of the time, the S&P 500 goes up. And 63% of the time, the average move is a 1% move to the upside. So looking at this and just rounding out some numbers, it's looking like the S&P 500 could push up another 5%, which that means that we would end up closing the year at $487 on SPY or $4,870 on the S&P 500. We could even see a push up to 5,000 on the S&P 500. Now, I don't think we're going to see a 10% rally going into the end of the year because earnings were not as crazy as a lot of people had expected, but I do think we could see 480, 490, 475. Things are looking very, very good here. Now, does this mean load up the boats? No, of course not. I still don't like where the economy is right now. I still don't like the uncertainty with inflation. There's a lot of issues that still plague the economy at this point as a long-term investor, and I still feel that 95% of companies are overvalued right now. However, just because a company is overvalued doesn't mean that the stock will not continue to go up. But something I want you to look at when we go back to the seasonality is what is the worst quarter historically? Q1, which is, this lines up directly with what we were talking about a month and a half, 2 months ago. Q1 is the worst month. So in January, the S&P 500 is usually up 38% of the time. So that means about 60% of the time we are down, and on average the S&P 500 moves down 0.53%. 63% of the time the S&P 500 is up in February, and 50% of the time it is up in March, and normally it's flat with about 0.4% move. So this is lining up with everything we had expected. I would expect that by the end of the year the S&P 500 moves up between $480 to $500, and then from that point, $480 to $500, we will probably see another pullback down to 450, which will act as a strong support, which would be an 8% pullback from that point. That is where I see this going, and it doesn't mean that it has to happen. I really wouldn't be surprised at this point if we were to pull back and test 425, but looking at it historically, looking at it from a probability standpoint, and looking at it from a statistical standpoint, that is how it looks like we will end up performing. So as of right now, I'm still holding on to about 20% cash. I really like to have 30% cash, but Q4, I usually do play very aggressively with my trading and with my long-term investing because it tends to be historically one of the best quarters as an investor and as a trader. Hope this video helped, guys. Hit the like button, subscribe. If you want to work directly with me, you can become part of our private mentorship group. It is completely free for the first month. No bullshit, no signing your life away, no getting emailed every single 5 seconds. It's completely free for the first month. Go check it out. You get access to every single live stream that I do, which is every single morning. You get to hang out with me in live stream, get access to all my trades, all my long-term investments, get access to our 60-hour course library, as well as our private Discord server. Guys, thanks for all the support. Hit the like button, subscribe, and I'll see you next time. Peace.